So we're gonna go over those short little ones that I gave you where you were just doing the cost of food used. Then we're gonna go over what we did the other day with the extra information for number, whatever we were working on, 15, I think. Gotta get my book. And then we're gonna finish. Number 15, we're gonna do it all the way through. We should be able to get through that. Then what I'm gonna have you do for Monday is a practice problem. And then we'll go over that on Monday. And then I changed some of the dates. If you go look on Venko, your first homework assignment that I will grade will be due Monday night. And then we'll go over that on Wednesday. Give you another one that'll be due Wednesday night. We'll go over that on Friday, and then your test is the following Monday. So that's where we're at. Questions? So that makes your test March 1st. I, with that one, gave you some extra time. So what I did is I started it earlier because everybody had an 8 o'clock class. So I gave you some extra time just because with having to type all this stuff and the format takes a little bit longer on the computer.
What's due this weekend?
So I'm going to give you a problem tonight. That's practice for Monday. Let me see. And that's it. You don't have any parts of your project due this week. So that'll be it. So it'll just be a practice problem for Monday.
Okay.
Okay.
So does the quiz change for chapter 3?
Nope. Quiz is whatever that was.
Okay.
Because we're doing this face-to-face every day, I can assign more practice problems and go over more practice problems. And so the more I can go over before you have to do your graded one, the better. So, okay. So we'll go here. And okay. So can you see that when I switch the sheets? Do you see 3, 4, and 3, 5? Can you see problem 3, 4, and 3, 5?
Yes.
Okay.
Yeah.
All right, because sometimes when I switch stuff, it switches, sometimes it doesn't. I never know. All right, so this was just to play with getting some cost of food sold. And so number 3 had food and it had beverage. And so there were some transfers back and forth in between. And so remember, for the income statement, we want cost of food used. And then we're going to take that to cost of food sold. So food used versus food sold are 2 different things. So with number 4, we have food and we have, this is actually beverage. We have beginning balances in the inventory account. We have ending balances in the inventory account. We have what was purchased. We have employee meals. And we have transfers to other departments. Okay. So let's look at this one. So we had a beginning inventory of 8,000, right? Okay, so we're going to freeze and not work. Hold on. Okay, what were the purchases for this one?
40.
40,000, right? Oh my goodness gracious. Well then. Okay. And then we had an ending inventory of what?
10,000.
So that gave us the cost of food used. In this particular one, we had transfers to beverage of 300. We had employee meals of 500. And so to get the cost of food sold, we have to take the used minus the transfers minus the employee meals. And so that would be our cost of food used. Questions? Okay, let's go over here to beverage. We had a beginning inventory of 3,000. Purchases of 20. Ending inventory of 35. So we have cost of food used, but then with this one, we had a transfer in, right? And so we're going to make the presumption that the transfer in is not included in the purchases. And so in this case, we would want to add in that transfer. So what you would do over here where it goes out, you subtract, where it comes in, you would add. Questions on that one?
I think it's good.
All right, so then this is number 5, basically the same thing. Beginning inventory is 12,376. Purchases were 76,840. Ending inventory was the 15,845. So gave us cost of goods used. Transfer to the kitchen. Okay, it was right there. And then so with this one, we had employee meals and we had promotional meals. And so that would all come off the cost of food used to get the cost of food sold. Because again, the promotional meals would not bring in any revenue. Okay. All right, then we're going to go back here. And this is number 16 that we started doing the other day. So
Sorry, can you go back to number 5 for a second?
Sure.
So the cost of food sold, you're doing the starting inventory plus the purchases minus the ending inventory, and then the transfer from the bar to the kitchen is a positive, and then you added the employee meals and the promotional meals together for that.
Hold on.
So promotional meals doesn't become a marketing expense kind of a thing? It impacts the food?
It may, yeah, because we want to get a true cost of, what it costs us to produce those meals. So there may be something else in the marketing. This really doesn't expense it. So it's probably expensed in marketing. All this would do is just take it off our cost of food sold. So that our
So it's
sales.
basically adding up everything and just subtracting out the ending inventory.
Yeah.
Okay.
All right, so then let's go back to, this is what we did the other day. This is typical additional information. never going to be the same, but you're always going to do some of the stuff will be the same. You're always going to have to do the cost of food sold. You're always going to have to do payroll. Everything else is going to just depend on what you have. Sometimes you have interest expense. Sometimes you have interest revenue. Sometimes you sell things. It all just depends on what you have. You're always going to have a management fee and a tax rate. But remember, you can't do those until you have part of the actual income statement done. Management fee is always based on something from the top, whether it's a total, whether it's a specific department, and it will always be based on that gross profit that after those first two departments. Because again, the first two sections on that income statement are what management have control over. So they can control some of those expenditures, they can control some of the revenue. And so part of the management fee would be based on what they made after that. The stuff that comes after, you don't have any control over. You can't control depreciation, you can't control insurance. Yeah, you can shop around for insurance, but it's not like you can make it go up or down once you have an insurance policy. So let's just go through the additional information again. This is 134, 135 again. And I say, just be careful. Sorry, 133, 134. Make sure, well, like what I just did, make sure you're on the right problem, because for some reason they couldn't print them on one page, which would have been very nice. So they roll over onto 2 pages. So first piece of additional information we had was that they borrowed money. So if they borrow money, they're going to have interest expense. Again, with this, watch your time. It's like adjusting entries. Never ever more than 1 year. Depending on what date they borrow the money, it could be less than a full year. So this was borrowed on April 1st. So we counted up the months and we said, okay, that's 9 months. Simple interest formula, the I equals PRT. Took the $1 million times 10% times 9/12, gave us interest expense of $75,000. As I'm going through, if you have questions, shout out there. Cost of food sold is number 2. Beginning inventory plus purchases. Remember, purchases came from the list minus the ending inventory. Had no transfers. But then we did have employee meals that we have to subtract off to get our cost of food sold. Number 3 was our fringe benefits. Any payroll you have to pay benefits on. And just make sure when you do your actual income statement that you take your payroll numbers from your additional information and not off the list. The thing you have to watch for is that food. So firstly, we'll calculate the benefits, which were 30%, simply 30% of the gross, all wages. There's always going to be A&G wages. Don't forget them. And you have to pay benefits on them also. The food is included in this benefit. So we don't have to do anything here. The one I'm going to give you tonight, the food is excluded. So when you do this step right here, put in the meals for whomever got them. This does not change. Excluded, included, this does not change. All that changes is the fringe entry. Included, do nothing. Excluded, put the meals on here, and it's going to increase your payroll total. Number 4 was our income tax, which is 25%. Can't do anything with that yet. Number 5 is the management fee. Again, can't do anything with that yet. All right, number 6, we had an investment in Marriott. It cost 10 and was sold for 15. So this was the stock, cost 10, sold for 15. So we determined that there was a gain of 5 because you have to pay tax on that gain. When you're dealing with a piece of equipment that has depreciation, it's a little more complicated. You have to compare the cash you receive to the book value. And remember, book value is cost minus accumulated depreciation. That's your book value. Okay, that's how you would get book value. Sometimes you have to calculate it. This case, they gave it to us. So to determine our gain or loss, we don't need the cost with this one. All we need is the book value. We sold it for 2,000. It was worth 5. So now we have a loss of 3. Is everybody okay with that? We kind of rushed when we got to the end the other day. We were running out of time. Okay. And then the last one, we purchased a CD on September 1st, $100,000, 6%. And so that was going to be interest income. So we had to calculate, again, using the I equals PRT. 100,000 times 6%. If it's September 1st, remember what I said. If it's a 1, include the month. If it's the end of the month, don't include the month. So we have September, October, November, and December, and you're allowed to use your fingers in this class. Okay. And so we determined that interest revenue would be 2,000. Okay, we okay? All right, so let's see if this works. Did you see a switch of Excel, or are you still on the old one?
It's showing the worksheet that you were.
That I was
putting
on?
in. Yeah.
Okay. I say sometimes it works, sometimes it doesn't. All right, so I cheated because I knew I wasn't going to have a ton of time. And I just kind of kept my grid that I knew that I was going to use. You're going to have to set yourself up a grid. You can use it for multiple problems, but remember, they're not always going to be the same. So now let's go to our information. So the first thing we're going to do is the room department. What I want you to get in the habit before you even start, because you'll be totally frustrated if you don't do this in the beginning. Look through your list for anything that's called an allowance. And if you look on the bottom of page 133, we have a food allowance. So what that has to do is with like returns. You're always going to have a customer that's going to return their meal. It's never going to be the right. It's not going to be cooked right, et cetera, et cetera, et cetera. But from our point of view with what we're doing, when we go to food, we need to subtract that 3,000 off our food revenue and show the revenue at its net. So just look for that. Sometimes they're in the problems, sometimes they're not. Because if you don't, you're going to be totally frustrated because you're going to have to redo what you have on there. All right, so you need to kind of have that sheet open with the additional information because I can't flip back and forth. So go to your list. Look for room revenue. And as I told you, when you're doing this stuff, check it off because you're only going to use the numbers once. What do we have for room revenue? Come on, this is supposed to be participation. What do we have for room revenue?
1.4 million.
Okay, no cost of goods sold for rooms, right? In this payroll expense, go to the additional information we did. This should be after the benefits. What is the total? What do we have? Come on, guys, we just did this. What do you have? So do I just let you?
It's the 350 plus then the 30% 105. So that would be 455.
Correct. Okay, we're not gonna let Anne Marie talk anymore. Somebody else is gonna have to talk, or I'm just gonna sit here and you guys can do this on your own. You're supposed to be paying attention and participating.
Sorry, mornings are hard for me. So when I hear that lull, I have to chime in. I'll put myself on mute.
No, I appreciate it. You're the only one that pipes in. And supposedly there's 25 other people sitting there. So I appreciate it very much. All right, other expenses for rooms. Come on. All I gotta do is pull the number off the sheet, the chart. Seriously. Okay, I expect participation. You guys are all here, supposedly. Look on the chart and give me a number. Otherwise, I'll start calling on someone, which I have a list of names. I can do that. It's up to you. And I can't see chat when I'm on the share screen, so you got to speak. So what do we have for other expenses? I got all morning, guys.
50,000.
Natalia typed 50,000.
50,000, thank you. Okay, so to get this net income and loss, what you're going to do is you're going to take the revenues minus cost of goods sold, minus the payroll, minus other expenses. And that's going to give you the net income or loss for the food department. And so we would have a $895 income for the food department. All right, questions on that? All right, let's go to food. So food sales were how much? Look on the list.
500,000.
Okay, but remember what I said, we got to take care of that allowance. So what we have to do is subtract that off. So instead of putting 500,000 there, we're going to put 497. So you just got to watch for those allowances. Sometimes they're there, sometimes they're not. If they're not, don't worry about it. But if they're there, it's either going to be in your food or your rooms. If they're there, put them in. All right, cost of goods sold. We just did that on that other sheet. What was our bottom number that we had?
215,000.
Thank you. Okay. And then payroll for rooms, what did we end up with? That's also should be on your sheet.
You have 350,000. Or am I looking?
You know, look, that was, look on the sheet, John, not on the list, because we had to add benefits.
Sorry, I'm just having a little computer troubles right now.
That's all right. Understand it. So it was
For,
original, go
for
ahead.
55? For 55,000?
No, that's your rooms. Go to food. Food started at 200,000 and then we added 30%.
So 260,000.
Correct. Okay, now just go to the list and find the other expenses for food.
$40,000?
Yep. Okay, and then we're gonna do the same thing here. This minus, minus, minus. Oops, didn't want to do that. Hold on. Oh, what happened in our food department? We actually have a loss. Why do we have a loss in our food department? What are your guesses?
Waste.
Okay,
Could also be that not enough sales were made.
okay, exactly. So it could either be this is too high or this is too low. So what should be kind of a norm for your food costs? What percentage? Come on, you culinary majors.
About 25 to 30%, or 25 to 35%, depending on the type of business you're running, if it's high class or lower class.
All right. So we'll say between 30 and 35% would be kind of a norm. Look at what this one is. So it's 43%. So they're either, like you guys said, this is too high, they're paying too much waste, whatever, or they're not charging enough. And so if they're limited as to what they can charge because of location, et cetera, then they got to do something about this to get their costs down. All right, questions on food. Big thing here, watch that allowance. And it could appear for your rooms, or it can appear for your food, or it cannot appear at all. Just watch for it. All right, we calculated interest income on the $100,000. How much did we say we were going to get? That was the last thing that we calculated. Anybody remember?
I'm sorry, could you repeat the question?
That was the interest income that we did. That was number 8. So we calculated the interest, $100,000 times 6% times 4 over 12. And it was
20,000.
2,000. Got an extra 0. Okay. So do you think there's any expenses associated with that interest? No, right? Okay. So for this particular property, those are the only things that are generating revenue. Any thing that generates revenue is going to be in that top part. And it really just depends on your property. If you talk about some of these resorts where they have all the different things, you could have a huge number of things up here. You could have a golf course, could have a gift shop. You could have like a day spa, anything that would generate revenue would go up here. So your next step is to total this first section. Why don't you go across? Hold on. I'll start again. Supposed to go across, but all right, we'll do it this way. Okay, so that's just totaling. So you doing this manually and by hand, I would suggest you check your numbers, check this down, and then also check this row. This is what accountants call cross-footing. They check it down, make sure it adds up. They check it across to make sure that it adds up. All right, questions on that first section? All right, the middle section is your undistributed operating expenses. And these are the same every single time. It's these 5 departments listed in that order. There should be nothing in this column. Nothing in this column. You might get a cost of goods sold. So if they're doing something here and they want to put it in cost of goods sold because they're charging for it, you might have something there. But honestly, these 2 columns, I'm going to say 99% of the time are blank. This one definitely no revenues. So we're going to go right over here to payroll. Because we know that we have, can you hang on 1 second? Okay, sorry about that. All right, so A&G, we started out with wages of 100,000. And we need to add the 30%, which we did. And so our wages for A&G are how much? Again, from the sheet that we did all that preliminary information. So when we're working on these things in class, my expectation is you're taking notes. So that additional information stuff, you're going to have to write down, because you're not going to be able to see that and what I'm doing at the same time. Plus, if you have it, then you have it there for the next time. Just like if we were sitting in class. So 100,000 plus 30% gives you how much? What was the total?
30,000.
Good. Okay. What were the other expenses listed for A&G? What was the total? They're just going to give you a total.
I believe it's 40,000.
Yep. Okay, now remember what I said about this middle section. This section is just expenses. And so all we want to do over here in the right-hand column is add them up. So that's all I'm going to do. Okay, that's all I'm going to do. We're adding the expenses. They're just expenses. All right, information and telecommunications. This usually shows up as a contract. So what do we have with this particular one?
20,000.
Okay. And that's all there is. All right, now sales and marketing. This can be different things. Look for payroll, which we didn't have any, or we would have done that with the additional information, but we could. It can be advertising. It can be marketing. If there's a franchise fee, that's part of your marketing costs. So for this particular one, what do you see in the list?
Marketing expense, advertising, 30,000.
Okay, good. So we got that. Is there anything else? Look on page 133. Does everybody see the franchise fee? What is the franchise fee?
That's 60,000.
Okay, so we would add those two to get a total of 90. Maintenance, again, can be payroll, can be a contract. In this case, what do we have? Look again on page 133.
60,000.
Okay, and it's just a maintenance contract, right? Okay. So utilities can be a couple things. Look for heat, light, power. Look for water. In this case, if you look on 133, that's what we have. We have heat, light, and power of 50. We have water of 20. So we're going to add those. All right, any questions on any of the numbers? So now what we're going to do is we're going to add this middle section. Just those 5 numbers. And we're going to add across. Okay, and again, we said there shouldn't be anything here, most likely nothing here. Total expenses, this number better be the total of those two. It's all expenses, they're all added. Your next step is to add your 2 sections. So we're going to add this. And we're going to add this. And again, we're going to carry it across. But I'm only going over that far. Now you will notice on my spreadsheet that I have a double underline after that row because nothing else goes in those columns. Remember, all about the format. And I think after the last test, you know I'm going to take off if you don't do the right format. Okay? All right, questions on the first two parts? So our next step is to fill in this gross operating profit. Okay, to the gross operating profit. So what you're going to do is you're going to take what we found from the first section. That's our revenue. That's our net revenue from any department that earns money. We're going to subtract off the additional expenses. That's going to be our gross operating profit. Questions? Okay. All right, now go back to your book. Because now we have to calculate the management fee. This changes. It's never the same. Just do what it tells you to do. But you cannot do the management fee until you get that gross operating profit, because it is always based on that number and something from the first section. In this case, 2% of total net revenue. So it's going to be 2% of this, 5% of your gross operating profit. And remember what I said. Sometimes they call it total income after undistributed operating expenses. Keep it short and simple, call it gross operating profit. So let's go down here and let's do some calculations. So we're going to take our net revenues, which is here, and we're going to multiply by 2%. That's one thing they told us to do. Then we're going to take our gross operating profit and we're going to multiply by 5%. We're going to add those two, and that's going to be our management fee. Management fee is going to go right here. It is subtracted off hang on, let me do something here. Let me make this negative. That will show better. Okay, and we're going to subtract that off. To get our income before non-operating income and expenses. Now, on the example that I showed you the other day, this line right here, they did it out separately. I don't care. If you want to list them all separately, that's fine. I have a tendency to just kind of put them together because I would presume that there would be a schedule that would have all that on it. All right, so we got to get going a little faster here. All right, so we have for this one, look for rent, look for property taxes, and look for insurance. You're always going to have insurance. You may not have both of the other two. So for this one, we have insurance of 50, property taxes of 50, and there's no rent. So this is going to be 100,000. that we're gonna subtract off. That is rent and, or I'm sorry, property taxes and insurance. And now we're gonna do this other income. And again, you can list them separately. So we had a gain of 5,000 that we calculated. And we had a loss of 3. So our net to go there would be 2,000, and it's gonna be added because it's a gain. That gives us our EBITDA. So we're gonna add up those 3. Depreciation is given to us. We look on the list. It is 80,000. Interest expense we calculated on that other sheet. It was 75,000. Going to get another subtotal. Then you're going to calculate your taxes. Your taxes, we said, were 25%. So we're going to take this number right here and we're going to multiply it by 25%. And I'm going to put a negative sign there because we're going to subtract it. That is your taxes. Net income. Will be that minus that. And there's a little rounding issue there, so it's off $1, but it's fine. Okay. Questions. Now, what I want to show you, this, did you see a switch of spreadsheets?
Yes.
Okay.
Yeah, it switched.
Okay, this is on Vanco Hall. I put everything in here so that you can see how those numbers were calculated. Okay, this is on Vanco. You can go look at this. Any questions? Okay, so this is what I want you to do. I want you to try number 16. It's the Milford, 134, 135. Follow exactly what we did with number 15, with one exception. If you look at number 3, it said the fringe benefits excluded the food. So do what we did with payroll, but then add the food to the room department and the food department. Don't change your cost of food used, but add that additional benefit to the payroll cost. And let's see what you can do. I expect you to attempt it, to try it, to come with it done on Monday, and answer questions. All right. Any other questions? I'll stop yelling.